What's going on, everybody? Chad here. I'm just driving from job to job. I just wanted to, I actually put in sprinkler systems for a living, one of my many jobs that I have, and I sort of connected to the housing industry quite a bit, and I just wanted to give a little update. Like, it's pretty interesting that what's going on right now, it's, you know, it sort of seems like it's like 2004 and 5 again, and not to the same extent, but it's just very interesting that we just got done with the largest housing bubble in the history of the world, and prices are starting to rise again. Home prices are starting to rise again. They're building new houses and new condos, and you name it, they're buying it. And the only reason why this can go on is because of 0% interest rates. No one has any money, real money, like savings. They print the money, but no one has any money, and they're still building houses. Home ownership's at like a 40-year low. Okay, so why are they building houses? I don't know, but they are. And it's just very interesting that this is going on after a big-ass bubble. You know, normally these bubbles take about 20 years to deflate, and you know, you get the collapse, and then it takes, the prices stabilize a little bit, but it just takes 20 years to bottom bounce and finally regain some sort of price structure that's in an uptrend. And I think prices only collapse for maybe 2.5 years, 3 years, and we're now in a 4-year uptrend in housing. And you can thank the Federal Reserve for that, because that's the only way that happened. But the thing is there's consequences to 0% interest rates. And really, if you look around and talk to the average person, you know, they just don't get it. I mean, there's something terribly wrong with an economy that can only function on a feeding tube, a 0% interest rate environment, and the constant injection of liquidity into the system buying garbage. Like, the Federal Reserve owns like $300 billion of student loans. They own consumer credit. They own just shit loans, and they buy it month to month. And they stopped buying it now, but you know, I believe they are reinvesting the interest that they earn. So, and I really think they're gonna have to start printing again and buying shit again. So, I mean, there is a consequence of 0% interest rates or low interest rates. And the last time we had a little bit of an uptick in interest rates, it collapsed the whole system. If you recall, back in 2003, 4, 5, 6, people were taking out loans for, you know, they're refinancing, for remodeling, for taking vacations off of it, buying cars, buying trucks, you name it, they bought it, and they were not even assets, they were just buying it. And all these industries grew up around that, all this artificial demand, and all of a sudden interest rates ticked up a few hairs and imploded the system. And the reason why it imploded the system was because people were taking out loans that they couldn't afford, but they were only taking out interest-bearing loans, so they were only charged the interest that was on the monthly payment. And so when those mortgages started to reset, their interest rates immediately went higher, and their payments coincidentally went higher. So, and it started a chain reaction where it started collapsing that portion of the housing market, and then went on to the bigger food chain, and then eventually collapsed the whole thing. And the interesting thing about it is that here we are in 2015, and we have infinitely more debt. We have infinitely more derivatives in the system. We have more margin debt in the system, in the stock market, and therefore we are more susceptible to an interest rate shock. And to add insult to injury, our debt on government debt is at $18 trillion, okay? Now, we're only paying less than interest, we're paying less interest on our national debt yearly than we did in the 1990s, when we had less than $5 trillion worth of debt. So we've more than tripled our national debt, and we're paying less interest than the 1990s. And the reason why we're doing that is because because interest rates are low. Now, if interest rates tick up a hair, what is that going to do? It does the exact same thing that happened with the adjustable rate mortgages. It collapsed the system. With $18 trillion worth of debt, interest rates just ticking up about 3% would put an extra $1 trillion in interest on our national debt per year. You got to be kidding me. You think that we can get that extra $1 trillion to service our debt when everything's tied to low interest rates? I mean, if interest rates start rising, it's going to start collapsing certain parts of the housing market. The oil market's already collapsed. Tax revenues are going to go down. And the more they raise interest rates, the less tax revenue they'll be able to take in, and the higher their debt's going to be, and the higher their interest rates are going to be, so their payments are going to be much higher. So this is mathematically impossible to pay off our debt. It's third grade math. Everyone should be able to figure out, but unfortunately, most Americans care more about football than they do about any of this. And so that's why they can continue this until there's consequences. Now, we're in a predicament, and predicament have consequences or outcomes. Problems have solutions. We don't have a problem. We have a predicament. And the outcomes of that is either we default on our debt, honestly, that ain't going to happen. We inflate our way out, which I think is going to happen. But either way, it's mathematically impossible without some sort of a shock to hit the system. Now, the Federal Reserve might step in and start printing money and buying bonds to basically stop interest rates from rising. But that's all artificial, and something else has to give on the other side. And there's just so many consequences of lowering interest rates below the real market level. Real market level should be supply and demand of money, and that hasn't happened for a very long time, unfortunately. And so this has very, very dire consequences. I just don't think we're going to cut spending. You know, I'm not here to debate that, but whether Social Security, Medicare, all that's right or wrong, but we do have about $100 trillion in unfunded liabilities. $100 trillion. And that's even worse than our $18 trillion debt. It's just our politicians won't even admit that the $100 trillion is there. And the reason why they don't admit it's there is because they don't have to, because they say that it's a liability that can be basically modified. And what they mean by that is that, well, Social Security can be cut. Well, you kidding me? You think a politician's going to cut Social Security? As soon as they say that in their campaign, you know, they throw grandma on her bus in a commercial ad. So they can't print money, or they can't, do the responsible thing and at least admit that we can't make these payments. So they're going to have to print money. They're going to have to default, honestly or dishonestly. And I personally think that the best thing to do in this environment is to, number one, understand this. You're pretty much higher than, and I'm not claiming that I'm like higher up than anyone. I don't even think I'm not smart. I almost failed math, and it's just so freaking obvious that this is going to happen that, a third grader could figure this out. But the first step is to admit the problem, and the second step is to create value in the economy and rely more on yourself and become more independent, because this government cannot take care of you. Family can, but the problem is the majority of the families and citizens really don't realize where we're at in this economic event. A lot of people think that this is, 10 years down the road, 20, 30, this is our grandchildren's problem. No, it's not. This is a very big problem. It's a very real problem, and it's really staring at us in the face. And we really should be recognizing that, but we're not, and taking action. And so the second thing is to create value. And by doing that, you can do several things. One thing I do, and I really encourage you to do, is I buy gold and silver. I run an online gold buying company that buys gold and silver online with tracking and insurance. We pay for the shipping, and we pay a very, very fair price. And I've also written a book on how to buy gold for profit without experience or money, and it explains in the book basically why you should be able to become a gold buyer, you know, after reading that 55-page book. And there's tips in there if you don't even have money to get started right away. And I really think it's one of the easiest ways to buy, you know, one of the easiest ways to create value in society. And it's not necessarily creating value, but you're buying stuff on the cheap and selling it. And you know, whether it be at a garage sale, an estate sale, or anywhere, you know, you can find crazy good deals because some of these people are just wanting to get rid of clutter. And some people think gold is worthless. I don't really care what people think about gold. I don't care why they're selling it. One thing that's really cool is, like, the other day I bought gold off of somebody, like $3,000 worth of gold off of somebody, and they're proposing to their girlfriend with some of that money. And it's just pretty awesome that gold is basically a currency, and it always has been. And you know, when you need to sell it to buy something else, it really is a currency. And I really would encourage people to get started doing that. You can do whatever skill you have, you know, obviously to create value, but it really is easy to get started, and you don't need any room. And I even teach how you don't even need money to start off. And I will provide a link in the description below to my book. It's 99 cents. Eventually I'll give it away for free, but I'm in a contract where I can't give it away. And so, you know, I encourage everyone to just find their niche, but my niche personally is in response to this collapse, and I think gold is actually going to respond positively to these events, because and that's just a separate video, but that's why I'm involved in gold. And I really hope that you consider it, because I just find it so you know, it's so cheap right now that, you know, that it's really an advantage for anyone to get started. Thanks for your time.